central banks. They sound boring, right? Like a bunch of stuffy old guys in suits whispering about interest rates and money supply. And yeah, that's kind of what they do. They're the financial guardians of their countries, responsible for keeping the economy stable. They control inflation, manage currency exchange rates, and generally try to prevent everything from going completely haywire. Think of them as the designated drivers of the global financial system. But here's the thing. Even these bastions of tradition are starting to dip their toes into the wild world of cryptocurrency. I know, right? Shocking. It's like finding out your grandma has a secret TikTok account where she does synchronized dance routines with her cats. But before you picture Jerome Powell doing the griddy at the next Federal Reserve meeting, let's be clear, central banks aren't exactly buying Bitcoin by the truckload, at least not directly. They're being a bit more subtle. So how are central banks getting their crypto fix? Through a sneaky little thing called indirect investment. It's like sneaking vegetables into a picky eater's meal, except in this case the vegetables are Bitcoin, and the picky eater is a massive financial institution. Take the Swiss National Bank, for example. They're known for being pretty forward-thinking when it comes to finance. Switzerland as a whole is kind of like the cryptocurrency haven of Europe. It's where all the cool blockchain kids hang out. Anyway, the Swiss National Bank has been quietly buying up shares of a company called MicroStrategy. Now, MicroStrategy isn't your typical tech company. They're obsessed with Bitcoin, like really obsessed. They own a ton of it, so by investing in MicroStrategy, the Swiss National Bank is indirectly gaining exposure to Bitcoin without having to actually buy it themselves. It's like ordering a pizza with extra cheese, but telling everyone you're just supporting the dairy industry. And it's not just the Swiss. Norges Bank, Norway's central bank, is also in on the action. They've invested even more heavily in MicroStrategy than the Swiss National Bank. It seems even the land of fjords and Vikings can't resist the allure of digital gold. So, what makes MicroStrategy so special? Why are central banks using them as their Bitcoin proxy? Well, for starters, they're led by this guy named Michael Saylor, who's basically the Bitcoin hype man. He's like the Elon Musk of the Bitcoin world, except instead of launching cars into space, he just tweets about Bitcoin incessantly. But beyond Saylor's infectious enthusiasm, MicroStrategy offers something crucial for institutions like central banks' legitimacy. They're a publicly traded company on the Nasdaq, which means they're subject to all sorts of regulations and oversight. That makes them a much safer bet than, say, some shady offshore crypto exchange run by a guy named Satoshi who may or may not be a bot. By investing in MicroStrategy, central banks get the exposure to Bitcoin they crave without the regulatory headaches. It's like having your Bitcoin cake and eating it too without, actually having to bake the cake or understand how Bitcoin works. Now, you might be wondering why central banks are even bothering with Bitcoin in the first place. Isn't it like super volatile and risky? And aren't central banks supposed to be the opposite of volatile and risky? Well, yeah, that's kind of their whole deal. But here's the thing. Bitcoin is also a potential hedge against inflation. And with inflation being a major concern these days, thanks to global pandemic and supply chain issues, central banks are looking for ways to protect their assets. Bitcoin, for all its flaws, is seen as a potential safe haven in times of economic uncertainty. It's like the financial equivalent of hoarding canned goods and bottled water in your basement. Plus, let's be real, there's a bit of FOMO, fear of missing out, at play here. Central banks see all these other institutions like hedge funds and pension funds jumping on the crypto bandwagon, and they don't want to be left behind. It's like the cool kids table at the global finance cafeteria, and nobody wants to be stuck eating alone with the boring bonds and commodities. So what does this all mean for the future? Well, it's still early days, but central banks dipping their toes into the crypto waters is a pretty big deal. It suggests that they're starting to take digital assets seriously. And who knows? Maybe one day, Bitcoin will be as commonplace in central bank reserves as gold and US treasuries. Or maybe it'll all come crashing down and we'll be back to trading seashells and beads for goods and services. Either way, it's going to be interesting to watch. Just, maybe don't invest your life savings in Bitcoin just yet, unless you're really into risk and potentially losing all your money.